afternoon, everyone. I just flew over from the States this morning, so getting used to the jet lag and all that still, so hopefully I'll get through this one. But we're going to talk about partnerships. I've been at partnering with fintechs, and kind of the theme of the last talk and some of the questions at the end were about partnering to innovate. Innovation, CX, that's kind of what we're all trying to innovate on right now, and that's what fintechs have been really strong at for the last several years. I've been at Michigan State Federal Credit Union for 16 years. Been a developer by trade, moved more into the product side, and have been doing innovation for the last 4 years formally. Yeah, let's get started. If you want to connect with me after, those are good places. I refuse to switch to the X logo for Twitter, so that's purposeful to keep that on there. So we'll keep that as long as they'll let me. So MSU, for a long time, we're a smaller financial institution. When I started, we were $1.7 billion in assets. In order to kind of keep up and really to serve our members, we really had to figure out different ways to deliver some of the services. We couldn't just buy everything we needed. And some of the things we were buying, it was really hard to customize. We were kind of stuck as the small fish client. We're not going to do that for you. We're going to put it in a queue, and if other people want it, we'll do it. So we started making a lot of our own stuff, which led to us eventually creating an innovation lab after we made our own digital banking, and the fintech industry kind of picked up, and we decided we didn't really need to build everything ourselves anymore. Other people were doing it better, and why try to recreate something that we're only going to do okay at? So we started our innovation lab, the lab at MSU. We created a separate brand on purpose so we could play with things, try things, and partner with companies and really see what our members really wanted to do. And just in case you're not familiar with credit unions, we have members versus customers, so I'll say that term kind of interchangeably with customer throughout. And then eventually, after about a year of doing the innovation lab and some formal partnerships with fintech, we created what we call Receipt Group, which is a subsidiary of MSU where we invest in and also create products. So you can see some of the different things we have there. We have a couple companies that we have as subsidiaries to the holding company, and then we have a couple products we're working on in the financial literacy and MarTech space. And there's a bunch of other partners that we have down below that we've actually invested in as well to kind of help them scale and help them be able to grow in the community banking space. Quite often, fintechs go find Bank of America, HSBC, and some of the other larger players, and they kind of forget about all the smaller institutions. So we're trying to provide an avenue and a way through strategic investment to help them think of community financial institutions. So there's a variety of different things on there. And then, those are ones that we invested in. And here's all the ones that we've partnered with over the past 4 years. So they're spread across a number of different kind of verticals. But really, at its core, all of them are trying to help improve the member experience, the customer experience for our members at the credit union. And as we've been working with them, we're helping them grow to be able to serve more and more institutions and really grow their products to be member-centric. And quite often through that innovation lab, we tend to be the first customer for some of these companies, and we give them their first real person product feedback as we go through. So why CX? Why partnering? This is getting dated, but in 2020, Salesforce surveyed a number of consumers who are both end consumers of products, but also businesses who are buying. So a lot of you in this room are probably buying some of these services. And what do people care about? The one number on there, I'm not going to go through all of them, but 80% of customers now consider the experience the company provides to be as important as its products and services. You've probably experienced that in your daily life, right? All the companies that maybe you think of and use and enjoy, there's probably something there about the experience they're providing that you enjoy. And may even be less about the product, because a lot of products, there's many options. And the reason you chose that one was because of the experience that they give you, whether it's because they remember you, they personalized it, there was something in that that really kind of got you excited about it and keep coming back and keep using it. Another stat on there to call out, this is still growing even from this time, but 52% of customers expect to always be personalized. They're interacting with the likes of Amazon and Netflix and name your service that's popular right now. All of those companies are doing well because they're personalizing their offering, they're personalizing their service. And in this same survey, they kind of pulled out and asked, which were the most customer-centric sectors, and you see in bold there, financial services. Surprisingly, healthcare is number one. So, I mean, at least in the United States, that's not necessarily what people think of being customer-centric. So very interesting. Travel hospitality makes sense. Retail makes sense. If they're not winning on the experience, what else are you providing? So we're down there in financial services with manufacturing and government, which is a sad place to be, but also ripe of opportunity if you want to be the one that actually takes and moves the experience forward. And partnering is the way to do it. So again, everyone's using these apps. Instagram's the other one over there on the other side, but we have Amazon, Netflix. This is what your customers are using on a daily basis. They are getting that personalized experience. Things show up to my house, from Amazon that I didn't know I wanted, but Amazon knew I did. And I'm like, oh, great. I was running low on this, and now it's at my door. I don't have to go shopping for it anymore later today. So sign up for subscriptions, do all these different things. And really, it keeps you coming back because they make it easy. They make it really easy to buy things from them, to interact, to get the experience that you want. And really at the core of that is that personalization. And these companies are all partnering with other companies in the background to help enable that. They've grown big and have kind of acquired and bought them, but they started by partnership as well, quite often. And all of us have customers, consumers. All of us probably have maybe a folder or something, or a series of app or a page on your smartphone that have all the different fintech relationships you have. Here's a bunch of payment ones. This just happened to be a slide from Buy Now, Pay Later thing. But Harris Poll and Plaid got together in 2022 and found that 8 in 10 Americans use digital banking apps, averaging at least 3 fintech apps, focusing on payments, paying bills, tax filing, online banking, investing, budgeting, and lending as emerging as the top use cases. They're already using everyone's using their smartphone as kind of their personalization mechanism. So how do we take that one layer deeper and build that relationship with our customers? And that's really where you have the opportunity to personalize and really using partnership to do so. Here's how Apple and Google and all the other carriers started doing this. They created the App Store. They started curating an experience and really encouraging kind of the user of the device to actually create and choose what they wanted. So by having a number of different offerings, you then have to make it easy for your customers to then choose and then have it in one experience. If you have them download 15 different apps, then you're giving the personalization back to the smartphone. If you want to have that within your ecosystem, how do you then keep at least some of the data, some of the information within your environment, and then direct them elsewhere after they've started? And you're kind of like the library, and they go looking for the books, if you will. So partnership is a strategy. That's a strategy we've been kind of enabling at MSU FCU for a long time, even before I got there. As a small institution, in order to grow, we need these partnerships. Our members interact with a lot of the big banks. They interact with a lot of the big tech companies. But those big banks, if they're already going to have a relationship with them, and more people are not needing local institutions. So if they already have an account, and we're affiliated with a university in Michigan, at one point in our history, every time new students came to campus, we got most of them to get an account because you needed a local account, and we were the one of choice there. But more and more, over the last 20 years, they've been coming in with whatever account their parents set them up with to make it easy to transfer money. Now a lot of them just have Cash App and whatever else, Venmo, PayPal, different things that they just send money back and forth and don't even think they need a bank account. So by offering some of these services and partnering with what they're already finding in the App Store, we're able to start building a digital relationship. So if you think of banking 20 years ago, 30 years ago, people used to come and deposit their paycheck every other Friday. They were coming in all the time, talking about sharing with that teller, this is my experience, this is what's happening this weekend. My mom is doing this, my kid is off to college, we're about to retire, we're going to buy this second home. And you were able to understand all these extra bits of information and data that you don't have if someone's just coming and logging in and checking their balance, moving some money around, and then they're out the door. They're doing all these other things, all these other companies, and that's why I have this rich data, because they're willing to share that because they know they're getting that service. Niche offerings and a menu of fintechs. We were talking about the App Store concept. When we're offering these partners, and you saw the slide, there are quite a few companies up there. We have 350,000 members of our institution. We know that not every fintech is going to serve all 350,000 of them, but FinTech A will serve $20,000, FinTech B, $80,000, and we allow the members to kind of pick and curate their experience through our digital banking and through those offerings. It allows you to drive digital engagement beyond just transactions. If we're just having people log in, how many times do you need to log in and check your account every day? And especially for us, trying to retain a bunch of 20-year-old college students who may or may not have more than $10 in their account at any given moment, there needs to be more that happens beyond just them coming to check their account and hoping that we get their business as they go through life. The other thing that we kind of have is an economic trend, or maybe just a generational trend, where the millennial generation is not doing the same things that the previous generations did, where you with a bank, got your credit card, got your car, then you got your house, and you aren't even 30 yet. Those are all being delayed. A lot of people aren't even getting cars anymore. They don't get their driver's license. It doesn't seem to be a thing. There's a lot more opportunity to use Uber or different services like that. Ride sharing, so they don't feel the need to have that, to have the freedom of having a car. Also, if we're not buying houses until we're almost in our 40s, what do you do with them in that relationship? So how do you help them figure out their money? How do you make them a stronger customer? Again, it's personalizing that experience and curating the experience for them through a bunch of different offerings and kind of letting them pick and choose what makes sense for them, and then have the right tools as they go through their life and experience. And really, if you see a lot of the banking commercials, the ones that you notice are the ones where they're basically showing, hey, this bank account enables your life. So it's showing them climbing a mountain or going on this cool vacation or starting a business. And that's because, the actual products and features, that's not what they're selling. They're trying to, again, sell that experience, that personalized opportunity. And then also, partnership allows you to go beyond digital. There's a whole experience with money that goes beyond just logging in and checking on it and moving it around on a smartphone. So I'm going to show a couple of examples of how we've done it in different ways. So the first example here is a company that we partnered with, Exigence. They're based out of Montreal, Canada. They had basically created these behavioral banking models and trained them, over millions of pieces of data from other clients that they had over time as they're building it out. And we worked with them to create 87 specific insights. And insights are what you see up here on the screen. These are 3 examples of them. So Meijer is a local grocery store in Michigan that a lot of people shop at. And it's kind of one of those all-in-one stores, so you can get oil for your car and camping equipment and also groceries. So there's a lot of trips there. So it kind of gives the average number of purchases. So it gives you kind of a look back. What did you do? It gives you something to kind of understand and see. Your largest purchase was $500. You've done 14 trips in the last 3 months. It kind of gives you a look back and gives you something more to look at than just, hey, here's your balance, and hey, here's some offers that we have to hopefully get you into your next product. So really, it's a reason for them to come check this space. And then through behavioral science, eventually there are some offers that sneak in here as well. That middle one is time to check up on your checking. Basically, it's saying, hey, your balance never dipped below $4,800 in your checking account. It stayed consistent. Maybe you should consider moving that into a certificate that then can earn higher savings interest rate than the 0% that it's earning in your checking account, giving them an option to make a quick transfer there. And then the smart savings hack on the end. So again, a lot of people are using buy now, pay later, especially in the demographic we're using. The suggestion here is we see that they've finally paid off that Klarna buy now, pay later payment plan. So how about we set up a automatic savings plan similar, so then that same $19 is then going into your account as auto deposit also. So really just trying to do that, and then there's feedback down at the bottom where you can react, and they can give emojis to then say, yeah, this one makes sense for me, this one didn't, and then we'll rebalance between what they see there, and these get pulled monthly for them. Another opportunity, so we have a number of different offerings, both product, but we also have a bunch of local loyalty, we call it, solutions where there are discounts at different merchants in the area. So this one happens to be a donut shop, reminding them that if they use their MSU FCU Visa card or debit card, they receive a free donut with the purchase of their coffee after 2 p.m. We have a lot of these deals with a lot of the companies. The company doesn't remember to remind our member about it. The member doesn't remember that we have these discounts. So this is just an opportunity. And these are geofenced. So as they're approaching the business, they're going in there anyway. We're trying to get them to use our card over other cards. We get the interchange revenue. That's good for our business. But it's really about, again, this is stuff they're doing and using that geofencing to personalize that experience based on their behavior and activity. The other one here is, so Spartans is the mascot of the university we're affiliated with, and as people are preparing for the next football game, encourage them to use their MSU Visa signature card to get 3% cash back on groceries, and remind them again to pull that card out while they're already kind of in the grocery store and doing that. And then the last example here is a company called Debbie. They are originally started by gamifying the kind of debt reduction experience, which was great and interesting. But this year we all started really needing deposits based on some of the things that were happening with the interest rates by the Fed. And they were able to see that as they helped people pay off their debt, and if anyone's familiar with Noom, they call themselves Noom for finance. So really it's about getting behind the behaviors. Why are you racking up debt? And if you pay off one card and now it's emptied, you just go fill that one up again. So it's really about creating behavior. And as they found that as people paid off their debts, they were able to start savings. And they're small dollar amounts, but they went from having almost no savings to having a couple $100 in their account pretty quickly because they were starting to go through these modules. And then they're incentivized to both save and pay down debt, and then also kind of really change the behavior and the way they think of money. So, here's another example of personalization. This one's really trying to help us kind of attract and retain kind of that group that maybe there isn't a product for them as they're leaving school. Maybe they just need to move money between their friends as they go out to the bar on the weekends and do different things in their life. And here's an opportunity for them to come engage and learn, and really then start to better understand and be eventually a better customer for us, but really, again, getting that personalized experience overall. So went quickly through all that, but I always end with the top 5. So if you remember nothing else, you can take a picture of this slide and say, this is what we do. And this is what I learned while I was here. Consumers care about CX. There's a lot of stats, a lot of research. I put one from Salesforce up there. But I think it's clear. I think we've seen it in both action and as you guys have experienced the world yourselves. Consumers care about customer experience. And really, financial services being at the bottom, we're ripe with opportunity to get into the mix and do a lot better. And really leveraging those partnerships with FinTech allow us to do that really well. Personalization is everywhere. It's Netflix, it's Amazon, it's Meta, it's Instagram, it's pick your service. Personalization is where it's at. Building digital relationships. The financial relationship has changed over time. We're doing more stuff online. COVID accelerated that. How do you then get to know your customer a little bit better? How do you then personalize the service? FinTechs are really great at taking data that you probably have access to, but they've specialized in doing something with that data, providing insights either to you to provide that personalization or directly to your customer to do so. And then curate the experience. That's really what your customer is looking for you to do. There's a lot of research out there that says, hey, I love this FinTech, but if my financial institution would offer that same service, I would rather do that because I feel like it's trusted, it's more safe. Some of these things are kind of just out there and maybe they're risky, I don't trust them. But I really like what they're doing, so I'm willing to give away data privacy and all these other things because I really like that experience that much. So if we can start to do partnership to then provide that experience that they're seeking, but also then have that trust and loyalty that we as financial institutions have built over time, that really helps us get a win-win for everybody there. And then go beyond digital. Again, there's a lot more to customer experience than the digital channel. A lot of talk and focus is on what is digital, what's generative AI doing, all that. But there's a whole experience to it from when you wake up in the morning, the different things you do during your day. Money is a part of that. Everything we do, think of how many times you needed to use something that touched a financial institution, app, something today. That's happening for all of us multiple times a day, every day. There's a lot of touch points, a lot of opportunity to really be a part of someone's life and a facilitator and enabler of their experience throughout, kind of their life and their different life stages as they learn and grow. So I left some time for questions here at the end, so I think we're going to come back up.
Thank you, Ben. Really interesting insights there into what you guys are doing. I do have a few questions, actually. Now, you had, one of your early slides showed numerous fintechs that you're working with. So how do you approach the selection process for who you work with to ensure alignment with your own CX goals and your own values? Absolutely.
So we have really aligned our fintech partnerships to accelerate we've identified gaps in our offerings. We've identified things we're trying to accomplish strategically, and really are using fintech partners to accelerate getting to those goals. We're never going to be able to figure out how to do behavioral science. We don't have PhDs and academics that are doing deep research in that. We're never going to be able to find someone, hire someone. That's a good way to then get people actually, again, we're trying to boost digital engagement. It's one of our core tenets, kind of at a strategy level across the board. Most of the people on here, in some way, shape, or form, boost digital engagement. Another tenet is exploring emerging technologies. So, and again, you have to be purposeful about that. So, again, we put them through the innovation lab to explore something. So if someone's doing something with augmented reality that's interesting, great, let's give that a try. Maybe our members didn't like it, so we kind of vet things on three metrics of viability, feasibility, and desirability. There's some things below that. But really that desirability is, will our members actually use it? And we do two things to measure that. We actually put the products out into the market. We have a subset. We launch it under that innovation brand. And then we see what is the actual use. And then we also survey those that use it. So sometimes people are like, oh, yeah, that's great. But then they used it 0 times during the course of 6 months. So do you really like it? So really trying to do both to understand that. So.
Yeah, I was going to ask actually how that, what it actually looks like when you say put something into the
Oh,
lab.
sure, absolutely.
So let's say, for instance, I'm a fintech and you approach me today or I approach you.
Yep.
What kind of timeline are you looking at in terms of saying, well, yeah, let's give it a try to actually implementing it and getting it out there to all your customers?
Yeah, absolutely. Now that we've built up a bit of a pipeline, so it's probably about 3 months from first conversation to actually be ready. And that's more, and that actually kind of works because we can then start to layer them, and everyone gets an opportunity to work through all the legal and compliance, and that usually takes the longest, especially if a fintech hasn't worked with a financial institution before and doesn't truly understand what goes into the compliance and legal side of things and the risk components. But yeah, if we were to start and had nothing in the list, we've done things as quickly as 5 weeks was the first pilot when we first got this started. And sometimes they take 6, 7 months just because there's back and forth. We get busy, they get busy, different things happen. But.
Okay, one final question as well then. What advice would you give to other organizations who are looking to partner with fintechs to enhance their own CX?
Absolutely. So I think the main thing is look for a fintech that is going to solve something that you can't solve for yourself. And don't try to do something better just because you say, oh, I like what this company was doing. I think I can make it myself. If they're already doing it and it's their number one thing, they're always going to do it better than you because it's the number one thing. If you like them that much, maybe you acquire them and bring them in and make them yours. But you also need to, as you're working with these companies, find someone that fits your culture as well. They may have great tech, but if you can't work with them, you can't truly be partners in a partnership. It's never going to work. So really look, and you're kind of doing this like dating thing where you're trying to feel them out and see is the founding team a team you can work with? Are they flexible? Are they willing to listen to your feedback and make changes to their product? Or are they just saying, here you go? Because that's not a partnership. That's just another vendor. So try to make sure you're finding a true partner.
Brilliant. Great way to end it. Thank you, Ben.
Thank you. Thank you.